थोड़ा सा बात करते हैं एंटी पोर्टफोलियो के बारे में.
Sure. So see, anti-portfolio is typically startups where we saw the opportunity and essentially we were not able to invest.
Did you happen to invest in any of the companies in that space?
We have in fact invested in a lot of consumer brands. Invested in a company called Bellora. We invested in a company called Believe, which does halal compliant cosmetic products.
थोड़ा सा बात करते हैं एंटी पोर्टफोलियो के बारे में. अंकित है ना, सम ऑफ योर बिगेस्ट एंटी पोर्टफोलियो स्टार्टअप्स क्या होंगे, एंड आल्सो व्हाट्स एंटी पोर्टफोलियो फॉर इन जनरल फॉर पीपल.
Sure. So see, anti-portfolio is typically defined as startups where we saw the opportunity and essentially we were not able to invest, right? Mm-hmm. And we were not able to invest because probably you were not seeing the startup as probably some other investors saw the opportunity in that startup, right? And that could be like because of various reasons, but essentially a missed opportunity for investor. So that's an anti-portfolio how it is defined. And see, the beauty for venture debt funds is that typically what an anti-portfolio is today could be an opportunity tomorrow, because we end up being very sector and stage agnostic. There are so many startups that we missed in pre-Series A or Series A, which ended up becoming an anti-portfolio for 4 years, but we decided to back them in Series C. So that way, thankfully, unlike equity funds, we do have an advantage of coming back and backing those companies from very early stage to very late stage. Right? Having said that, one of the opportunities which I think was an anti-portfolio for myself, while it's a long list for us, but one of the opportunity for us would be there's a e-commerce marketplace for beauty called Purple, which is a competitor to Nykaa. It's a listed company now. Is over like last 6 to 7 years, there were multiple times when we looked at that opportunity, and every time we would question that a marketplace is a winner-take-all market, and because Nykaa was always significantly leader in the space, we would believe that is there a space for a second or a third player, especially in a marketplace kind of a business model, that too in a very vertically niche category of beauty, right? So there were opportunities where we could have backed Purple from 2016 back to 2022, but we could not convince ourselves to go aggressive to win those deals, right? But then our learning was that there's nothing called winner-take-all market, right? Ultimately, a company could be in a winner-take-all situation today, but just the execution can let 5 more players enter into that market and disrupt it and make it a oligopolistic market. Right? So I think execution, that's what matters the most. Like even in case of Purple, I think the credit really goes to the execution of the team more than anything else. If the execution is right, so essentially you end up backing the founder and not overanalyze the market and the whether it's winner take all market or not. Ultimately you back the founders if you believe that they can execute it right.
Got it. I think but did you happen to invest or put in venture debt in any of the companies in that space?
So we have in fact invested in a lot of consumer brands in the beauty space. For example, we have invested in the Good Glam group. We invested in a company called Bellora. We invested in a company called Believe, which does halal compliant cosmetic products. So we have invested in multiple companies in the beauty space, but our belief continues to be that while there will be many more players who are running consumer brands in the personal care space, there will be limited number of marketplaces, and today there are still 2-3 large marketplaces on the beauty personal care space in India, but they will continue to see a lot of bigger consumer brands coming out of this.
Got it. अंकित, कोई और कंपनी है, कोई और इन्वेस्टमेंट स्टोरी है जो पर्टिकुलरली स्टैंड आउट करती है आपके लिए?
So I think one company that we all have, I think all venture players have missed out in a way, was a company called Dream 11. I think Dream 11 was a case where it maneuvered through the journey of the Dream 11 was maneuvered through regulations that were not built for gaming startups in India, right? So it was a great venture capital investment bet, right? But when it comes to venture debt, right, we typically avoid taking when there is an element of binary risk in the startup business model, right? And because Dream 11 as a business model was maneuvering through a journey of what is right to do in India in terms of real money gaming, right? Venture debt funds could not take a bet on that because the regulations were also changing very fast, right? And but then it was a miss for all of us, where ultimately Dream 11 become what it is today. It's a huge mammoth gaming startup in India. So those are, I think, also one of the learnings for us, where we realized that a lot of very early stage, extremely disruptive startups, you'll always see them as, are they really challenging the regulatory status quo in India, right? Now, from the likes of Flipkart to Ola to Rapido to Swiggy, right? Whenever these startups were created, right, there were no law of the land on how to deal with those business models. That doesn't necessarily mean that what they're doing is not legal. It's just that the regulations are not addressing that particular business model. But when they become too big, then obviously the government comes forward and put together the guidelines on how to run those business models. But that's also been one of the learnings for us, that regulatory haze in early stages is okay till the point nobody is doing anything illegal. But a lack of regulation is something that one has to be okay with, especially in the early stages.
I think Ankit, iske pehle na, I was building a real money gaming company, and so we were doing all influencer-led quizzes and influencer-led games called fan game, right? And I remember back then, abhi to Dream 11, matlab back then also it was really huge, I think. But up to Dream 11 is like a massive giant in the whole real money gaming and gaming space. Up to it's become it has its own investment wing also. Chote gaming companies it started to nurture now, right? And eventually that feeds into the whole gaming ecosystem. But I think of late also what has happened कि पूरा ये जो real money gaming है उसमें massive regulatory changes आए हैं, कुछ disruptive changes in terms of regulation, I believe. बहुत सारी चीज़ें उसके अराउंड वायरल हो रखी हैं. 28% के आसपास GST इम्पोज किया जा रहा है ऑन द डिपॉजिट itself. But let's see I think what has happened is कि रेगुलेशन ना रियल मनी गेमिंग स्पेस में हमेशा ही एक मैसिव चैलेंज रहा है. एंड ऑफ लेट द recent regulations are, I think, a killer for the industry. But I'm pretty sure the industry will come out of it. Let's see where it goes.
Yeah, I think any industry which is too big to fail now and will have a big consumer base will always find its way. That we have seen consistently around. I remember 2015, 16, everybody was even doubting how can e-commerce even exist in India? Does it even have a right to exist? Because one could see that some of those business models were, in a way, there were questions on, are they flouting the current regulations in India, right? But that was a time where the government authorities also realized that, look, can India be without e-commerce in India, right? And then regulations were built around it. So even for gaming, I think every 2-3 years, what happened last month is not the last time when we'll see any big regulatory change in the gaming space in India. It is also a space which is evolving so fast that it will also take time for government to also completely comprehend how to put the guidelines around this industry. So I think every 2-3 years, regulations will evolve as well as startups will evolve, which also will create a lot more newer opportunities for newer gaming startups in India. Where can you now create a newer startup around this and keeping in mind the new guidelines now. So I think that's the beauty of the startup space as well, right?
I think the recent regulations that came out, frankly, again, very individual perspective, but I believe that since बहुत emotional एक मेरा एंगल है रियल मनी गेमिंग के लिए, बहुत टाइम रन कर रहा है, तो आई बिलीव कि रिसेंट जो जिस रेगुलेशन का क्या काम है ना, मुझे ऐसा लगता है कि रेगुलेशन काम है कि एक सपोर्ट करना है इकोसिस्टम को, राइट? द रिसेंट रेगुलेशंस दैट केम आउट और मोर ऑफ लाइक कि इस इकोसिस्टम को मिल्क कैसे करें, इस इकोसिस्टम से हाउ डू वी एक्सट्रैक्ट द मैक्सिमम जूस आउट ऑफ इट रादर देन सपोर्ट इट, राइट? I hope things will change.
But Pritesh, usme I completely understand. Like I've chatted with a lot of founders in this space, but sometimes the reaction in terms of regulation that comes from the government could also be short-lived, right? When there is enough push from the industry body on to really cut these regulations, right? It's a matter of time where you'll see some more changes coming out, which will become a lot more friendlier for founders. And we've seen that this across industries. Like there have been regulations which have completely banned a business model in a particular industry many years back. But in a year, 2 years, like there were enough pressures, enough guidance to the regulators as well to start seeing it differently. So I think it's a matter of time. Like gaming industry is definitely here to stay. But the difference is whoever could survive this for a few more years will obviously become in a much stronger position.
Yep. Let's hope for the best. But I think Ankit, हमारे ना एक previous discussion पे मैं वापस आना चाहता हूँ. And you talked about e-commerce, you talked about consumer brands. But थोड़ा सा क्या हो रहा है कि I remember you saying कि we having this discussion कि consumer brands पे ना बहुत सारे लोग अब बहुत सारे लोग bet नहीं कर रहे हैं. Not a lot of people are bullish about consumer brands, right? But you of all the lot you're saying, I remember you saying you're very bullish about consumer businesses in general, right? Not just D2C brands. क्यों ऐसा लगता है? Why do you think still at least as far as India is concerned कि consumer businesses बहुत strong निकल कर आएंगे?
See, I think any investing universe, right, will always go through phases of something is extremely hot, then something is not, then becomes extremely hot. And that happens across sectors, whether it is a B2B commerce or a consumer brand or a SaaS or a fintech or a logistics, right? Whenever, let's say, an industry is not there at all, let's say, for example, there is a business model which doesn't even exist, right? Consumer brands as a business model or as a funded space was not even existent until 2017-18. Until some of the, some funds kind of started taking a very aggressive bet on consumer brands becoming big. Right, and then because of some of those stories working out very well, there were just too many consumer brands doing similar stuff across categories, right? And whenever you see too many players coming into any space, naturally you will see a higher mortality in that space because of competition, because of margin pressures. You will not get as much as venture returns as possible, right? So suddenly you'll see a 3 to 4 years of massive uprise in the activity of investing into consumer brands, and then there will be a phase where investors will feel that okay, everything is too saturated and everything is already taken for. Now there is no more categories left where you can create more consumer brands, right? And which also coincides with the funding winter where you'll not see as much of companies getting funded in a space which was extremely hot, let's say last 3 to 4 years, which happened with education, which happened with blockchain, which happened with possibly every sector, right? But I think what truly differentiates, I would, in my opinion, a great investor to a not so great investor is going back to first principles of fundamentally, does this business make sense for the country you are in, for the demographic population that you are in, and the next 7 to 8 years of what you're going to see in India, right? It doesn't matter what the competition is. It doesn't really matter. Are we ready for it today? But the bet that you're taking is anyways for next 7 to 10 years. And I truly believe that as a nation, as I said, we are extremely brand starved as a nation. More than 80% of what we consume as consumers are not branded stuff, or not because of our choice of what we want to consume. It is because of what we only get in front of us because of affordability, which is changing extremely fast. So today, will you see large unicorns coming out of every possible categories within consumer brands? Whether it is mattresses, whether it is furniture, whether it is travel bags, suitcases, whether it is apparels, I think we're still scratching the surface. And we sometimes end up believing that we have a large company in an apparel space. Now probably there's no space for 5 more companies to come out of that. If we go to more developed countries, who are like maybe a decade ahead of us in terms of the brand stories, be it China, US or Europe, like in every categories there are like multiple extremely large brands. There's no reason why India will not have that. So it's sometimes just it coincides with the funding story rather than the business story, which we see there's a lull of 1 or 2 years in certain spaces. But as a fund, as an individual I'm extremely bullish about the consumer brand story space.
बट अंकित क्या इतना बड़ा कंज्यूमर बेस है भी इंडिया में? बिकॉज बार बार मतलब वी कीप टॉकिंग अबाउट भारत, बट भारत में क्या है कि कंटेंट कंजम्पशन बहुत ज़्यादा है, बट बाइंग कैपेबिलिटी एंड व्हेन इट गेट्स टू मोनेटाइजिंग दैट भारत, जो इंडिया का टीयर 3 जनता है, वहाँ पे अगेन मल्टीपल कंपनीज हैव बीन फेलिंग इन टर्म्स ऑफ गेटिंग रेवेन्यू आउट ऑफ इट. तो क्या इतना बड़ा कंज्यूमर बेस है भी इंडिया में?
Yeah, great question, Pradesh. I think the most relevant question has been the TAM in India, and every different person has its own view of what is really the target market for you, right? So I think I have a different view here. Like every time when we think about is it a big enough opportunity, we start thinking about, oh, can it be a unicorn? Can it be a decacorn? Right? Because the only startups where we draw inspirations are the startups which have become $1 billion, $10 billion companies in a matter of 5 to 6 years, right? If you become a $10 billion, if you don't become a $10 billion company, doesn't necessarily mean you're a large enough, impactful startup. Like today, if in a consumer brand, you can create a 500 crore brand in India in a matter of 4 to 5 years, right? That itself is a huge, big opportunity, right? How many brands do you actually have in India, created out of India, and has more than 500 crores of revenues in the last 7 to 8 years, right? We've just started seeing that, where there were some 30, 40 brands which were sub 100 crores. All those have crossed 100 crores. 20, 30 of them have breached 500 crores now. All in the last 5 to 6 years, right? All those brands which have crossed 500 crores will start crossing 1,000 crores now, right? But do you need to have brands which have 5,000, 10,000 crores of revenues in 5 to 6 years? Probably not. Because when we are so used to looking at size of e-commerce companies, marketplaces, B2B commerce companies, fintech companies, where we hear few thousand crores, $1 billion of revenues coming out of it, right? When you look at consumer brands, it has to be looked at slightly differently. It will take its own time to grow into some of those extremely large size numbers, but will be a lot more stable than some of the completely internet-led marketplaces, in my opinion. And second point is, I think you need to choose your customers also wisely. Right? Even if you cater to like top 10 cities in India, right? Can you create 1,000 crore brand out of it? Absolutely yes. You don't need to service all form of demography of population in India to create a successful brand. I think that's where also some of the brands which I've seen go wrong is they're trying to cater to everyone. Like India is a market where even if you take like a chunk of 2% of the population and just cater to them, I think that itself is a huge opportunity.
I think India is also a market na jahan pe you build your product based on say tier 1, then you move to say other tier 1 cities ही मान लो आप, you build a product for Bangalore जनता और फिर आप दिल्ली की जनता के लिए मूव करोगे सेम चीज़ को, तो वर्कआउट नहीं करता है. सडनली वहाँ पे डेमोग्राफी बिल्कुल अलग हो जाती है, राइट? डिमांड्स भी अलग हो जाते हैं.
और कहीं ना कहीं मुझे लगता है कि यार इफ यू आर ट्रूली क्रिएटिंग अ ब्रांड, राइट, you cannot think creating the brand consumer love as well as scalability on the same side. See, sometimes the downside of having too much venture capital is you're only thinking about scale. And if you're only thinking about scale, as a brand, you're not thinking about an Ankit or a Pritesh as a consumer. Have I actually, in next 6 months, have I bought your stuff again or not? Like then you're not thinking about repeat. If you don't think about repeat, you don't think about consumer loyalty and creating your brand as a cult. Because you're only thinking about, can I acquire a new customer? You're not thinking about your existing customer and can that customer come back to you and buy again? Which is I think sometimes a peril of raising too much capital, especially as a consumer brand, where we keep guiding our consumer brand founders is that don't raise too much capital. Because then you start thinking about your next round more than you think about your customer.
आई थिंक थोड़ा सा कंज्यूमर ब्रांड के बारे में और बात करते हैं. D2C में आई वुड लव टू डेल्व डीपर, जो पूरा बूम है D2C का, एंड यू हैव पुट अ लॉट ऑफ कैपिटल अक्रॉस सम ऑफ द टॉर्च बियरर्स ऑफ D2C, राइट, इन इंडिया, लाइक बोट वी टॉक्ड अबाउट. ठीक है, क्या फैक्टर्स कंट्रीब्यूट करते हैं टू द सक्सेस ऑफ दीज बिजनेसेस, एंड हाउ डू यू सी कि D2C इवॉल्व कैसे होगा अगले कुछ सालों में?
See, I think the first principles of all these successful brands are extremely, I would say, common across these sectors, right? Like, we have this company which is creating one of the probably largest travel accessories companies in India, which is Mokobara. or like it's gone up almost like 8x, 10x in a matter of 10 years, in a matter of couple of years, right? And it started at a time where started at the time of COVID. Imagine starting a travel accessory company at the time of COVID, right? That tells you about the founding team and the passion behind it. Then there are companies which are disrupting the mattress space. There are companies which are disrupting the apparel space, right? Across all these companies, I think one thing that is common, now talking a little bit of more PC language, I would say is having extremely high gross margin in your product, where product has to be truly differentiated in terms of its offering, that you are able to command a price which gives you a very high gross margin. Your gross margins ideally should be above 50-60%, right? So that there is enough time for operating leverage to kick in, where there's a massive amount of profitability, right? If you are earning a margin of 10-20% in the consumer brand, then you don't have enough space for you to create large pools of profitability. Second, I think is, as I mentioned before, thinking of understanding your consumer, who your consumer is, understand your consumer set, and define it very clearly, right? Because there will always be distractions where you are trying to find and create as many customer sets as possible. But if you truly understand who your consumer is, you are able to cater to their needs better, and you are able to build on the repeat customer better. Like, can you really create a cult brand where people are coming back to your brand because they want to wear your brand, not necessarily the utility that come out of a product, right? Third thing is, I think, kind of a community angle to it, right? And I think one of the things that stuck into my mind, one of the founders who mentioned this to me, is that I was asking that, do you have a community built around your brand? Like, is your team working around building communities? And his answer was, a true community is not what a company builds. A true community is what your consumer builds. Like, my true community will be if my consumers, without even my knowledge, I started creating pages on Instagram and Facebook, not where my brand team is creating those pages for my consumers. That is true community, right? So I think truly understanding what drives your consumer, why do they want to get associated with your brand? Are they referring your brands to others? Building on that, especially for next first 3 to 4 years, is extremely important. That you are able to spend time to understand who your consumer is, what your brand stands for, and what is really a true value proposition for your brand. I think some of the unit economics of CM1, CM2, all those things fall into place if you are able to truly understand your product well and work on the needs of your consumer for first 2 to 3 years. In terms of target market, I think across categories, the target market is huge. That I don't think is a constraint in India.
Got it. And I think I want to change gears here, Ankit. I want to talk a little bit more about, instead of companies, I want to talk a little bit more about funds, right? And मतलब जैसे हमने पहले भी डिस्कस करा था, लास्ट टाइम हम जब डिस्कस करते हैं, बिल्डिंग अ फंड इज लाइक ऑलमोस्ट लाइक बिल्डिंग अ कंपनी, राइट? एंड so I want to delve deeper into it, and I want to understand कि थोड़ा सा before getting into anything else, I've seen that a lot of number of funds have come and gone over the last few years, right? And जो fund बनाने का पूरा process है ना, it often gets overshadowed by the spotlight on startups, right? But you have been involved in running and building multiple funds in your life. Can you shed some light on this aspect and about the details in building and running a successful fund?
Sure. See, I think important aspect here is that if you're decide to run a fund, right? It starts with, they always say that buy side journey it comes with a lot of patience. Like, that's the difference between a buy side journey and a sell side journey. Is in a sell side there is a lot of immediate gratification that you get out of funding a deal, because you could have a very good year or you could have a very bad year, right? In a buy side setup, in an investing world where you have a book to invest, right, you will only know how good your fund is over a period of time, which could be 5 to 7 to 10 years, right? There will never typically be that, okay, this month was a great month and next month is not a great month, because you only know the result of your outcome over the years. So I think first important virtue is patience, that you are in it for long term, and that you will be in it for long term only if you believe in both the country story as well as the asset class story. In our case, we have to believe in next 10 years as a country, how India will do, next 10 years of startups in India, next 10 years of venture capital, as well as next 10 years for venture debt. All those intersection will only make us believe that can we take a 10 to 20 year bet of our lives in being in a space which we call as venture debt. Right. Second thing I think is most important is having an investment thesis, right? Because there will always be a lot of distraction in the market where you'll find your peers backing certain companies or ideas where you are not subscribed to, right? And it will always give that feeling of fear of missing out, that hey, what have you missed that others can see, right? But sticking to your investment thesis is very important, that even if you have passed something, right, and that company has become extremely big, right, rather than regretting or changing investment style necessarily, it's important to go back to your first principle and say that hey, going back in time, I would still pass on that company because for my knowledge, for what I understood, for my fund thesis, it was still not making sense, right? Till you have that conviction, right, to back your instincts and back your misses as well, which means that you need to have an investment thesis, right? You will never be able to think long term and eventually back companies that you truly believe can change the outcome of your fund, right? So as an investment manager, I can't keep changing my idea of investment every month based on what I see in the market. While we have to be on our toes to keep learning about business models on what has changed in the market, but fundamentally you need to go back to your first principles on what you decide for your own fund, what is right for you. And what is right for me as a fund may not be right for some other fund, which is extremely nuanced and important to run a successful fund. Third, I think, especially for venture debt, I think is discipline. Is because your responsibility is your first important stakeholder is not founder, is actually your investor, right? We are primarily responsible to generate return to our investors and not to please founders, right? It's a very tough balance to have where you need to do the right thing for the founders to be in the right kind of companies, right? But sometimes you need to take certain calls on whether to invest or not, because ultimately you are responsible for giving back money to your investors. Right? I think that balance instills a lot of discipline on how you want to run a fund. And when I say discipline, this could mean the size of the fund, the tenor of the fund, the kind of companies you want to back, right? How much risk are you taking into your companies, right? How granular is your portfolio, right? These are like not easy things to do when you're in a market which could be extremely competitive, and you'll always keep having FOMO, right? Like in this industry, both as founders, investors, right? You'll always have a fear of missing out. And what are you really missing out? But if you see a journey of like multiple cycles, you will never get too bullish in a strong market or get too nervous in a bearish market. You're a lot more stable in your mindset and keep going back to first principles of what is the investment thesis of your own fund. So I think these are 3-4 different interesting attributes which and I think last but most importantly, I think it's the team. Is that are you able to kind of hire, nurture and retain the team with you, which essentially there should not be any intellectual hierarchy in your own team, right? If I am doing venture debt for 15 years, doesn't necessarily mean that I will know more than the recent analyst or an associate that we have hired. Right? Sometimes somebody is close to the market could know more than what I have been knowing about a certain sector or a space. So it's very important because it's completely a people's business. You need to have a right mix in the team who stays with you, and when you take decision, you are able to share a lot of stories with your team. Like if I have 6 people working in a fund and all 6 of us have been together for last 7 years, it really helps where you are able to share a lot of stories that you've seen in the past, and every decision is a factor of what you have seen in the past together and what you're seeing now.
I think what you just said, Ankit, sounds a lot like building a startup itself. I think, but Ankit, I want to capture one aspect. आपने बात करी about being accountable to your investors and raising funds from your investors. I want to talk about that part. How does raising fund from LPs look like for an venture fund?
It's not too different than a than how startup founders raise funds from their own investors. The only thing sometimes that differentiate is that when we look at in a startup founder, right, we are looking for always a big change, right? We are looking for something that has to be disruptive and has to be scalable, right? And sometimes having backing a founder which doesn't have experience in a particular field actually helps, because you don't fear taking a risk because you don't belong to that space, right? If somebody is doing a startup in a fintech space, sometimes they actually end up backing a founder because that startup founder doesn't come from doing 20 years of banking. Because if you've done 20 years of banking, you'll probably be a lot more risk averse, right? For a startup founder or startup, that becomes actually a more important thing for us to look at. But this is very completely reverse when you look at how LPs invest into fund managers, because it's a very long haul game for us. LPs invest into fund managers where experience really matters. Vintage, experience, seeing cycles, discipline, those aspects start mattering a lot more than compared to backing a very young founder who's trying to just disrupt. See, we are not trying to disrupt anything. We are trying to back companies which are disrupting. So I'm in the business of finding trends, right? Finding companies which could disrupt rather than me disrupting the venture model itself. Where, hey, today I decide to be a fund manager which will start taking a lot more risk, right? But either the outcome could be very big or I can lose a lot of money for my LPs, right? That's not what they are putting the money for. They are putting the money for a lot more certainty and predictability of returns rather than how they look at as a startup, where it could go either ways. So I think that is fundamental difference between how investors look at funds versus a startup. An investor could possibly be invest in both a fund and a startup, but how they will look at a fund and a startup will be very different.
Got it. And I think but what has happened is in the last एक साल में अगर बात करें तो हम थोड़ा सा ना the whole startup ecosystem has collapsed a bit. Maybe not collapse might be a very extreme term for it, but एक downturn में है and the returns have also deteriorated मतलब simultaneously for funds and all. So how do you see the current downturn? How is it different? And कब देखते हो आप? When will this revive?
Yeah, honestly, nobody will ever have the right answer for this, right? So I can only predict. But see, we don't read too much into these things because of you can call our age and vintage of doing this. We have seen multiple cycles like these before as well, right? However, there is a little bit of fundamental difference in this cycle which will always continue to be. I think every new cycle will have its own new story. It will always also look like, okay, this is probably what we have never seen before. That, like, I can tell you across hundreds of years, every time there is a down cycle comes in any sector or in the overall economy sometimes as a whole, it will always, the last one will always look like the worst, right? And it will feel like, okay, this will probably never end, right? But what continues to remain the same is this is all because of movement of capital, right? Sometimes there's too much capital comes into a space. And when I say venture capital as a space, right? Because there is always an allocation of capital from large pools of capital that goes across various industries. Sometimes it is climate, sometimes it is private equity, sometimes it is venture capital, sometimes it is real estate, right? When there's a little bit of too much capital comes into a space, in our case it was venture capital. At 2020 to 2022, we saw hundreds of billion dollars of capital coming into startup as a space into funds, and from funds into startups. Naturally, it was overheated, right? Are we saying that in next 4 to 5 years, this will continue to go down and we'll stop seeing startups coming out of India or world? Obviously not, right? But because the cliff was too steep, I would say in 2021, like the valuations went a little too up compared to any of the previous cycles. The fall will also be a little bit steeper. Right? Instead of recovery happening in 6 to 9 months, it probably could take 1 to 2 years, right? But the good part is, I think we are as a ecosystem, we are now more than a decade old, right? So a lot of founders and investors have a lot more experience on dealing with these situations, right? If it's a startup was burning too much cash a year back, can you get back to profitability? That template is a little bit more well understood now compared to what it was 6 years back. Thankfully, a lot more startups have raised a lot more money in last 2 years. So a lot of startups are sitting on a lot of cash. They have a lot of time to maneuver through this period, grow into their valuation, and it's a matter of time. Yeah, we're all living in an extremely capitalistic society. So I think capital pools will keep exchanging hands, will keep coming back, and there are extremely sharp minds running this industry. They'll always find a way to kind of getting a lot more capital back to the ecosystem and putting it to the right use. So I think we are not too worried about it. It's a matter of 9 months, 12 months. We see a lot more capital coming in, and then all that capital will look at that capital and coming and follow up. So not too worried about it.
I think जो बहुत pessimism है ना अंकित in the whole startup ecosystem right now, I can clearly see that pessimism. You don't have that pessimism. You're very optimistic, right? And hence one last question.
No, absolutely not.
One last question for you, Ankit. Ki how do you do health checks for your portfolio companies right now? Right now, let's say.
So when you say health check, any specific thing that you are looking for?
No, how do you see कि अच्छा ये सही जा रहा है, यहाँ पे हमारा investment जो है वो that's going fine, that won't collapse, right? And ये जो investment is going down and this a high risk investment right now.
See, I think for us, instead of a point at time, it's important to see the period and understanding are we going in the right direction or not. So any startup that we look at a point in time, that I want to look at the numbers performed in July, will never make sense if I don't have a context of where they were last July or July previous to that, and how are they looking forward in future. So it's very important to stay with the founders and stay with the startups close enough to understand the direction on where they're heading. Right? So for us, that is why it's extremely important to contextualize before we are able to assess whether the startup is doing well or not, and which direction are they heading. So we spend a lot of time keep interacting with founders, investors, players in the ecosystem across sectors, across stages, across industry to understand what is important today, what could be important tomorrow. So everything will have a lot of context to it, and with that context it helps us to kind of sometimes understand the performance of the startups better, also sometimes able to guide the startups in terms of what could be important tomorrow. So I think just very regular engagement with our founders really help us to health check. I think regular communication is extremely important. We don't forget about our investment after putting in money and look at after 6 months on, hey, look at how that startup is doing. For us, it's literally every month. Every month we interact with the founding team to understand where the direction is heading.
I think मैं आपसे ना अंकित एक लास्ट बहुत क्लीशे क्वेश्चन पूछता हूँ कि I know there is no correct answer to this, but how does a company protect itself against market crash, let's say?
यार सबसे पहले तो यार मेरे को लगता है कि यार सबसे पहले protect the most important team members. I think that is like step number 1. आपको whenever you think that things are not going and you're not uncertain about the future, but you have the conviction that आपको बनानी है. Like if you truly believe that you really want to make something out of it, सबसे पहले find the right people, share everything with them, motivate them, and make them a much stronger part of the risk and reward that you have. And I think that is half job done. And if you find the right people who truly believe in what you're trying to do, I think markets don't matter then beyond a point. Right? Second thing I would say is be a cockroach. I think just think about survival, like whether it is 6 months, 9 months, 18 months for you. Think about survival, and third thing I would say is think about truly the product, like what your core offering is. Like then beyond a point, I think capital doesn't matter. If your core offering, whether it is a fintech company or a consumer brand or an apparel company, if your product sells, अगर आपका माल बिकता है ना और नहीं बिक रहा है तो क्यों नहीं बिक रहा है, right? Which helps you to survive as a cockroach. आपकी टीम आपके पास है, आपका प्रोडक्ट सॉर्टेड है ना, then no capital will come and go. Like fundamentally, I think team and product matters. Everything else is solvable.
Awesome. I think be a cockroach, right? I think that's the key takeaway from here. I think thank you Ankit. It was a brilliant discussion. I will wrap this up here. If you enjoyed this, it would mean a lot to me if you subscribe and share your thoughts, reviews and the guests you want. दोबारा मिलते हैं नेक्स्ट डिस्कशन में.